Hey everybody, Rob Maurer here. Welcome back to Tesla Daily and happy Friday. I hope everyone that was celebrating Thanksgiving yesterday had a great holiday. Today we have news on Tesla in Berlin. Tesla actually turning down some funding. We'll talk about that. We've also got a plethora of updates from Tesla in Shanghai. We've also got news on Tesla in Canada and a couple other things as well. Start off with the stock though. Tesla today finishing down about 3% in the short day of trading today to $1,081.92. That compared to the NASDAQ, which also had a tough day in the markets overall. NASDAQ finishing down 2.2%. Most of the negativity today in the market seemingly being driven by concerns over a new COVID variant, new strain popping up in South Africa. This is still very recent, not a ton of data yet, so I don't want to spend a ton of time on it until we do have that data. But that was driving concern today, and you can see that in various tickers. So COVID stocks, as they've sort of become known, like Zoom or Pfizer and Moderna, very much up today. All right, I do want to quickly catch up on Elon Musk's stock sale, as we did have more Form 4s published on Tuesday evening that we haven't had a chance to discuss yet. This was another round of Elon exercising shares from the 2012 Performance Award and selling shares to then cover the tax on that exercise. So very similar to the lots that we have seen before, about 2.1 million shares being exercised and then 934,091 being sold to cover taxes. And this also means that was a pre-scheduled sale from back in September. Elon hasn't sold in a not pre-scheduled way since back on November 12th. Looking at the totals then, and of course pending any other Form 4s that we may get tonight, so far Elon has sold about 9.2 million shares. That'd be about 54% if we assume his 10% is 17 million, or if it's up to 25 million, that'd be about 37% of his total sale being completed. And as for the 2012 Performance Award, there are still 14 million unexercised shares that have already been vested. So at the current tax covering sale ratio that we have been seeing, that'd be about 6.4 million shares left to sell from that. And that would put him at about 15.5 million. So there would still need to be some unscheduled sales for Elon to get up to that 10%. All right, next up here, we've got some pretty interesting news for Tesla in Berlin, and unfortunately no news on final approval yet as we await the review after the public commentary period did end. No updates there, but there is some news today on a potential incentive that Tesla had seemed eligible for in excess of 1 billion euros that we had previously talked about for building a battery factory there in Berlin. But there are a multitude of reports today out of Germany from Der Tagesspiegel and others that Tesla has actually declined that funding. So obviously that's a little bit surprising. Not too often that you see companies turn down what would have been almost $1.5 billion US of funding for no given reason. And remember, the approval for this funding seemed like pretty much a done deal when we've talked about this topic in the past. And as a part of this report today, apparently a European ministry spokeswoman confirmed today that, quote, the aid for the project in Grünheide had been approved by the European Commission, end quote. So apparently fully approved, and yet Tesla has waived this funding, again, no given reason, and there doesn't appear to be any change in plans in terms of Tesla actually building a cell manufacturing facility in Berlin. Looks like that is still going forward. So kind of a perplexing situation here, and of course we don't really know the fine print of the funding, and maybe there's something in there that Tesla is just hesitant to agree to or accept. And there is some mixed reporting on this so far about whether this is fully a Tesla decision or if this is something else. Some sites, including Ars Technica, are reporting that this may be due to some of the stipulations on that funding. They write, quote, the EU requires any sites in receipt of the funds to be, quote, the first industrial deployment of the technology according to official documents, meaning the batteries cannot already be made at another Tesla plant, end quote. So they've gone with a headline that Tesla has been forced to decline this funding, which doesn't really make sense. You can't really offer someone and then force them to decline it. Instead, you would just retract your offer or not approve the offer. So I don't really understand the logic there. And again, we had that quote from the European minister saying that this funding had been approved. Now, that doesn't necessarily mean there wasn't some strings attached to that Tesla, again, didn't want to accept. But I'm not sure it's really cut and dry like Ars Technica and others are putting it here. Not saying that can't be true, but definitely seems a little bit odd. We've known for quite some time that Tesla has planned to start with 2170s in Berlin and we think 4680s in Texas. So this situation wouldn't have changed recently in terms of deploying 4680s somewhere else first, which is what they're saying makes Tesla ineligible. And I don't think that matters anyway because Tesla's already been producing 4680s at Cato Road for a long time. And yes, it's a pilot plant, but they also intend to ramp that pilot plant up to 10 gigawatt hours, which may not be huge for the scale of Tesla, but is still a pretty sizable battery manufacturing facility. So we've known these things for a long time. Tesla's known them even significantly longer than we have known them. So I don't see how the European Commission and Tesla would have gotten this far down the path without discussing any of those things and received the approval and then Tesla being quote unquote forced to decline that funding. So my intuition is that this was truly Tesla's decision to decline the funding, but my guess is also that there was probably some attachments alongside the funding that Tesla just didn't want to commit to. The only other possibility is that Tesla just doesn't feel like they want the subsidy, but it's pretty hard to turn down free money. Yes, there is a stigma attached with that, with being subsidized, but honestly, I think that probably is going to exist whether they accept it or not, especially with how much the EV tax credit is going to provide to Tesla here in the US, if that does end up going through. So if you're going to be criticized for that anyway, might as well accept the funding, but I could definitely see the other side of that argument as well. So again, Tesla didn't make any direct comments on this, but Elon did reply to a tweet on this subject saying, quote, "It has always been Tesla's view that all subsidies should be eliminated, but that must include the massive subsidies for oil and gas. For some reason, governments don't want to do that, ... end quote. So no explicit reason given there, maybe alluding to the fact that Tesla doesn't want the subsidies, but again, since oil and gas subsidies haven't really changed, then why not accept a leveling of the playing field if that is Elon's view? Whatever the reason, even though $1.5 billion is a lot of money, thankfully at the scale that Tesla is at right now and the operating cash flow that they're generating, we just talked about this a little bit ago, this is just a few weeks of operating cash flow for Tesla. So if there were no stipulations, definitely would be nice to have, but certainly not the level that is critical. All right, next up here, we've got quite a few updates on Tesla in China. The first is that we have a report that Tesla is planning to expand their Shanghai factory. They're looking to invest about $188 million in an expansion that would allow them to hire up to 4,000 more people, which would be about a 35% increase in staff there at Giga Shanghai. If we assume that Tesla is already at a 750,000 plus run rate in Shanghai, and if we just assume the headcount correlates with increased production, that could push them pretty easily over a 1 million vehicle per year run rate. Obviously, that's a very basic assumption, but I think it works well enough to demonstrate the point. China media site 42How also reporting on this on Twitter. They shared a little bit more detail in an extract from a different report in China. And that report says that the expansion is expected to start next month and be completed in April. We've also got a few product updates in China. First, it looks like Tesla may have switched over to Tesla Vision only and removed radar from China production as well. They have updated the design studio to read more like the US design studio, where instead of mentioning 160 meters of forward-facing radar, it now just talks about 250 meters of Tesla Vision. It's obviously a bit speculative, but presumably that reflects a change in the hardware as well. Should be a decent cost reduction and boost margins from Shanghai. Also, a potential margin booster is Tesla seemingly beginning the deliveries finally of the made-in-China Model Y performance version. Previously, we had seen photos of one at the factory, and now we're seeing one on a car carrier. And Kelvin Yang on Twitter reporting that deliveries have indeed commenced. He also shared a screenshot that shows the listing of an AMD Ryzen being used as the graphics card in the Model Y Performance, which would be different than what Tesla has been using in the Model 3 and the Model Y, and likely matches up with what Tesla is now shipping in the updated Model S and X. So maybe a sign that Tesla is starting to convert entirely over to that setup for all vehicles. If so, and if Tesla starts delivering things that actually can take advantage of those capabilities, maybe we see a retrofit eventually be available for the older vehicles. The other product update that we have here out of China, I don't have a source on this one, it's just kind of popping up on Twitter, but it is being reported that the Model Y in China is shipping with a lithium-ion 16-volt battery rather than the lead-acid 12-volt battery that has generally been used. Of course, this is also the case for the Model S and X, and if this moves over to the 3 and the Y, that should offer reduced weight and size for that battery, as well as improved reliability. Lastly then, for Tesla in China is another round of price increases, so this has been pretty quick succession for the rear-wheel drive Model 3, and then the rear-wheel drive Model Y also seeing a price increase, both about 5,000 RMB, or about $750 US. Moving over to Canada, Tesla's also made some pretty significant price changes there, most significantly to the rear-wheel drive Model 3, increased the price there by almost 4,000 Canadian dollars, and that actually bumps it above a $55,000 federal EV rebate price threshold. Drive Tesla Canada says that this now makes the cost to the consumer about 12,000 Canadian dollars more expensive than it was just a few months back. Tesla then also increased the long-range and performance Model 3 prices by 2,000 Canadian dollars apiece, and the long-range Model Y by 2,000 Canadian dollars, and the performance by 1,300. All right, last quick update for today and for the week then. This is on Rivian. They have informed their reservation holders for the R1S, so that's the SUV version of their R1T, that their deliveries are now going to be pushed back a little bit. So previously, first deliveries were expected in January 2022. Now the earliest of the communication has been March to April 2022, with some reservation holders being told June to July. So somewhere between a 3 to 6 month delay on the previous communication. All right, so that is it for today then. As always, thank you for listening. Make sure you're subscribed and signed up for notifications. Make sure you have an awesome weekend. You can also find me on Twitter at Tesla Podcast. And I'll see you on Monday for the November 29th episode of Tesla Daily. Thank you.